Welcome back to the Deep Dive. Today, we are opening the gates to one of the most desirable, and I have to say, secretive real estate markets in Southeast Asia.
We are. We're looking at Phuket's Millionaire's Mile.
And this isn't just about, you know, pretty villas by the sea.
No, not at all. This is a highly sophisticated, ultra-luxury asset class, and it's almost all concentrated on the island's western coastline.
What makes this deep dive so special, I think, is the quality of our source material.
It really is. We've basically synthesized decades of on-the-ground knowledge from ocean worldwide.
And they're a luxury real estate agency that's been based in Phuket since, what, 2004?
That's right, since 2004. So we're really extracting a masterclass from their director, Sandra O'Neill, who's personally helped thousands of families and investors in this very specific market.
Okay, so that's our mission today. We're going to unpack what drives this market, who's buying, and this is the big one, how foreigners can legally navigate Thailand's pretty complex ownership laws.
And to give you a bit of a preview, the one thing that really underpins this entire market is, surprisingly, stability.
Stability in a luxury market, that seems counterintuitive.
It does, but the data shows it's resilient because it's driven by what the source calls lifestyle investment. So people are buying for themselves, for holidays, for retirement, not just for a quick flip.
And the immediate hurdle is the legal side. I mean, buying a condo is one thing. That's fairly straightforward with freehold titles.
Right, but you're limited by that 49% foreign ownership quota.
Exactly. But the real dream of Millionaire's Mile, those huge villas that requires these complex structures like long-term leaseholds or the very tricky Thai company structure. And that's the tension we'll get into.
So that's what we need to unpack.
So let's start with the geography. Where exactly is this Millionaire's Mile?
Okay, so we're talking about the most prestigious stretch of Phuket's western coastline. It runs roughly between Kamala and Surin beaches.
And the name is not just marketing fluff.
No, it really isn't hyperbole. The area's topography, the way the hills rise steeply from the coast, it allows for these huge private estates to be built high up.
Maximizing views and, I assume, privacy.
That's it. It's where that tropical island fantasy meets, world-class, bespoke architecture. It's all about seclusion.
So it's the verticality of the landscape that's key. It's not just being on the coast.
Precisely. The appeal is built on what developers call unparalleled seclusion. You have these incredible villas with infinity pools that just look like they're spilling into the Andaman Sea.
And private beach access, I'd imagine?
In many cases, yes. You're not just buying a building. You're buying an uninterrupted panoramic view and total privacy.
Okay, so let's say you're a buyer coming in from, I don't know, London or Hong Kong. What are the non-negotiables you're looking for here?
The sources are really clear on this. There are four main drivers. First, it has to be those unrivaled ocean views. That's paramount.
Okay.
Second, security and privacy. Gated communities are a must. Third is high-end finishes and design, so contemporary architecture, premium materials.
And
finally, proximity to amenities. You need to be able to get to the best restaurants, marinas, that sort of thing, very easily.
Okay, so let's circle back to that stability point.
Yeah.
Why is this market so shielded from the volatility we see elsewhere?
It really goes back to that lifestyle motivation. When someone spends, say, $15 million on a villa for their family, they're not really thinking about a 20% return next year.
They're buying an asset for personal use.
Exactly. It's a quality of life asset. So they're much less likely to panic sell when the global economy gets shaky. And that long-term commitment is what gives this specific market segment its resilience.
Let's zoom in on the enclaves themselves. The West Coast has all the established infrastructure. Where are the key spots?
Well, there are three main areas that really define the luxury scene. You have Kamala, which is probably the most famous part of Millionaire's Mile itself. That's where you find those really impressive, super private sea view estates.
And Surin is a bit different, right? It's got more of a social chic vibe.
It does. Huron Beach is very upscale, very sophisticated. It manages to balance a lively atmosphere from the beach clubs with the tranquility of the villas that are tucked away in the hills nearby.
And then further north, you have Bang Tao and Layan.
Correct. Bang Tao and Layan are very established luxury hubs. Bang Tao especially because of the whole Laguna complex.
With the golf and marinas?
Exactly. All the facilities are right there. Layan is a little more serene. It's popular with people who want that peace and quiet but still need to be close to everything.
I want to get a feel for the properties themselves.
Mhm.
What's the design philosophy inside one of these architectural statements?
The whole idea is to blur the lines between the indoor luxury and the lush tropical scenery outside.
So lots of glass.
Massive floor-to-ceiling glass walls that can slide away completely, open-plan living spaces, and they use a lot of natural materials like stone and rich woods to make the architecture feel grounded.
Which must be a huge engineering challenge in that humid tropical climate.
It's an enormous challenge. You feel connected to the ocean, which is the reward, but managing humidity and climate control has to be flawless. And that's what you're paying the premium for developers who can actually pull that off.
And a scale. The scale is just mind-boggling. Give us some of the hard numbers from the source.
The numbers are, well, staggering. You're looking at land plots that can reach up to 11,200 square meters.
That's almost 3 football pitches.
It's huge. And then the villa itself, the built area, can be around 2,400 square meters. These are full-on estates.
What did that get you, 2,400 square meters?
You're typically looking at 5 to 8, sometimes more, ensuite bedrooms, multiple infinity pools on different levels, a home cinema, private bar, and of course, extensive quarters for staff.
Which puts the price tag where?
Easily over the 20 million US dollar mark for the top tier properties. It attracts a very, very exclusive buyer.
Okay, so as this market matures and that prime coastal land gets harder to find, we're seeing a couple of big shifts. Let's start with branded residences.
Yes, this is a huge trend. This is where you own a property that's linked to and managed by a big global brand, like a Four Seasons or a Banyan Tree.
And the appeal is basically hassle-free ownership, right?
It is. It solves the biggest problem for an overseas owner. The appeal is twofold. First, you get brand trust. You know the quality control and the standards are going to be immaculate.
Right, you know what you're getting.
And second, you get professional management. They handle everything, maintenance, staff, even renting it out for you.
So I get the amazing villa on the beach, but I don't have the headache of trying to find a reliable pool guy from 5,000 miles away.
That's it exactly. It just streamlines the whole experience of owning a massive, complex asset.
But what about the physical shift? With prices climbing on the coast, where is the market expanding to?
The sources are pointing very clearly inland. The new hotspot is the Thalang district, so areas like Sri Santhorn and Thepgrisoptri.
Now, if I'm moving inland, am I giving up that proximity to the high-end restaurants and beaches that drew me in the first place?
That's the key question, and the answer is increasingly no. The value proposition inland is simple. You get a lot more land for your money.
More space.
Much more space, which really appeals to families or remote workers who are looking for a more permanent base.
But what about the convenience? The travel time?
It's surprisingly minimal. These new luxury developments in Thalang are often just a 15 to 20-minute drive from the main beaches like Bang Tao or Surin.
So you get the best of both worlds.
You do. The developers are bringing that high-end design inland, and buyers get this great balance between island living, practical needs like schools, and just a lot more space.
Okay, we've established the primary driver is this lifestyle investment. Let's dig into the buyers themselves. What does that international profile look like?
It's truly global, but we're seeing 3 main groups with pretty distinct preferences.
Okay.
Russians are very active right now. They tend to focus on the larger villas, 3 to 6 bedrooms, often in the 20 to 60 million Thai baht range.
So that's roughly, what, 550,000 to over 1.6 million US dollars?
At least, sometimes much higher. And they really prioritize family homes near Phuket's international schools.
What about the Chinese market?
They show a different pattern. They generally prefer condominiums. They see them more as a holiday spot or a rental investment, maybe in the 5 to 10 million baht range.
Which makes sense with the simply freehold ownership for condos.
It aligns perfectly. And then you have the Western buyers from the UK, Europe, Australia, the US.
And what are they looking for?
Their tastes are a bit more varied, but as a group, they really value privacy, space, and quiet developments with, high architectural standards. They fit that classic lifestyle investment model perfectly.
Even with personal use being the main goal, properties like this have enormous rental potential.
Oh, absolutely. The yields can be spectacular. Phuket's a global destination, so a luxury villa on Millionaire's Mile can command really high nightly rates.
Like what?
It's not uncommon to see rates upwards of 3,700 US dollars a night for a fully staffed luxury villa.
But that comes with the management headache we talked about, which is why these guaranteed rental returns are so popular.
They are. The GRR schemes are the ultimate hands-off solution. The developer offers you a fixed annual return, usually between 5 to 10%, for a set period of, say, 3 to 10 years.
What's the catch? Because a guaranteed return always sounds a little risky.
The catch is that you are putting your trust entirely in the developer's financial stability.
I see.
The guarantee is only as good as the company that makes it. So the sources are unanimous. You absolutely have to choose a respected, well-established developer if you're considering a GRR scheme.
Which brings us to the most crucial section of this deep dive.
Yeah.
The legal framework. We know foreigners can't directly own land in Thailand, so how are these huge estates secured?
For any property with land, like a villa, there are two main paths. The first, and by far the most common, is the leasehold title.
A long-term lease.
Essentially, yes. It's typically for 30 years, but often comes with pre-agreed options to renew, sometimes up to a total of 90 years. It grants you very secure usage rights as long as it's properly registered with the land department.
Okay. And the second route is the Thai company structure, which sounds more complicated.
It is, and it's coming under a lot more scrutiny. This is where a registered Thai company owns the land. But by law, at least 51% of that company's shares must be held by Thai nationals.
And in the past, people used nominee shareholders for that.
Exactly. Thai citizens who were shareholders on paper but didn't have any real involvement, and that's the risky part now.
Why is it so risky?
Because the authorities are cracking down. If a company's only real purpose is to hold property for a foreigner and it has no other genuine business activity, the government can challenge and even invalidate the whole structure.
It's a high-risk strategy.
A very high-risk strategy now. In contrast, you have condominiums, which are much, much simpler.
Right, the freehold model.
With a condo, a foreigner can own the unit outright. It's a clear, perpetual title to that airspace. But, and this is a big, and it's limited by the 49% foreign quota.
Meaning no single condo building can have more than 49% of its space owned by non-Thais.
That's right. So for popular new projects, that foreign quota can sell out incredibly fast. It makes the simplest form of ownership a scarce commodity.
So whether you're looking at a $500,000 condo or a $20 million villa, what is the single most important piece of advice from the sources?
It's non-negotiable.
Yeah.
You must get reputable legal counsel that specializes in foreign property ownership in Thailand. The laws change, the risks are real, and only an expert can make sure your investment is structured correctly and is secure for the long term.
So this deep dive has really shown that Millionaire's Mile is more than just a place. It's a fascinating model of luxury market resilience.
It really is. It's defined by incredible design, that unique geographic advantage, and now this ability to balance coastal exclusivity with new opportunities inland.
It's an evolving market.
Absolutely. And that leads me to a final thought for you to consider.
Go on.
Given that the real driver of this market isn't quick financial returns, but rather quality of life, that lifestyle investment we keep talking about, does this focus on personal enjoyment actually make these Phuket properties the least volatile and maybe the most secure luxury asset in all of Southeast Asia?
That's a fascinating question. And if that idea of a stable, lifestyle-driven asset appeals to you, the source for today's insights, Ocean Worldwide, can guide your next steps. You can find out more about how Director Sandra O'Neill and her team can help at oceanwwp.com.
That's OCEANWWP.c.gocom.
Thank you for joining us for the deep dive.